Welcome back to Life with DJ Sessions, Lessons in Financial Empowerment. Coming to you live from Atlanta, Georgia, down here with the homecoming, Jay Morrison, and the whole week of events. And which brings me to the topic of self-employment and really working for yourself, entrepreneurs. And there's a lot of misinformation out there about that. So I wanted to kind of go through the breakdown of if you're going to work for yourself, be an entrepreneur, work for yourself and gain your own income, there's a method to making sure that you still qualify to purchase real estate. Okay. So one of the first things I want to talk a little bit about is the different types of self-employment, right? So you've got sole proprietor. So that sole proprietor is someone who just, uses their own social security number usually, and they start selling whatever it may be. Okay. And depending upon the state you're from, they're going to classify you as different things. But if you're self-employed and you just work for yourself, the downside to that is that you don't have any liability. So you sell a product to someone, something happens, you sold it, it's on your social, you're going to be the one getting the brunt of the anything bad that comes from that. Okay. Most popular right now, we hear a lot about LLCs, which is a limited liability company. And really, what you've done is you've provided yourself with some protection. I myself, but I'm also representing a company, separate, EIN number. And what a lot of entrepreneurs, self-employed folks do, rightly so, you have a lot of benefits when you're working for yourself. You write off a lot of stuff, right? You write, we go out to dinner with, a business dinner or lunch or breakfast, and you're discussing business, you write that off, right? It goes against, as a part of your expenses. You buy equipment for your business, it's a write-off. Gas, right? You have folks who, do a lot of traveling, you're writing off mileage. Mileage is an expense. The cost to run your website, the cost to, any type of trade, trade organizations, dues. There's a lot of things that could come along with the expenses. Now, obviously you've got income, but they keep it real simple. Is if I, let's say, had $100,000 of revenue for my business and I had $100,000 of expenses, and let's even say that you got a little bit of add backs of maybe $10,000, $20,000. Well, to the eyes of a lender, right, you've made $20,000 for the year. And so that's where folks get into like, whoa, wait a second, I make more money. Well, you kind of have to understand that, when you're filing taxes and you're telling Uncle Sam that, my only reportable income is $20,000. Well, that's what we're going to use as the income for your loan. So another popular solution that some folks get into when they, kind of grow from an LLC is they become an S Corp, right? An S Corp says, let's use that same example and say, well, maybe I had $100,000 revenue, but I paid myself $60,000, right? That was my W-2 income for my own company, right? And then let's say $40,000 of that was remaining, but then there was some, expenses and maybe the company maybe had a profit of maybe $5,000, maybe $10,000, maybe even a loss, right? But, it doesn't take from the fact that I paid myself $60,000, right? So there's where getting with a proper accountant, CPA, someone who can understand your taxes can help navigate you when you're working for yourself. I think it's really important to understand that, yes, it's okay to, work for yourself and get out there and generate your own income. But if you're not claiming the proper amount of income, to show that you are a viable business, lending institutions are not going to give you a loan. Now, there's one caveat to this. There are some programs, that, we have access to that, you can qualify with bank statements only. Hey, I write off everything, but listen, I make a lot of money. All right, well, we've got a program where they're going to qualify you using your business bank statements. Okay, well, that's fine. You could do that, but now you're paying a higher premium, higher pricing for that type of loan. The last thing I wanted to mention is, so let's say that you've DJ, I'm been claiming income, I'm filing my taxes. So, but I want to buy a house. Okay. Well, here's what we're going to need, right? You're going to need at least 2 years of business taxes or even personal taxes on a Schedule C, right? Now, are there some exceptions, right? Are there an exception to 1 year? In some cases, very rare cases, but the general rule of thumb is 2 years. Okay. So you got 2 years of your taxes. Okay. What else do I need? Well, if it's June, right, and I'm buying a home in June, I'm looking to buy a home. Well, we're going to need, and let's say this is 2022. So we're going to need 2020 and 2021 taxes. And from January to May, a profit and loss. Companies, the lending institution is going to want to see, what are you doing now, right? What have you done this year so far? Now, a profit and loss statement can be prepared by yourself, can also be prepared by your accountant. All that is again, almost like you filing your taxes, but you're doing it on a spreadsheet or some sort of accounting software for, your year to date. Okay. And so then the final piece of that, and sometimes this is asked, but so I'm telling you this, is that they're going to say, okay, we'll also want to see your last 3 months bank statements. So we're going to want to see May, April, and March, the actual bank statements that would then validate your profit and loss statement that you put together. Okay. Those 3 things, with your taxes, the profit and loss, right, and your bank statements, you've now shown the lending institution that you now have the ability to repay your loan, whatever that amount is. And that's all part of the process of being a self-employed entrepreneur working for yourself. This again has been an episode of Lessons in Financial Empowerment. My NMLS number is 271-823. Thank you again. See you.